a solid set coming in from the leader of the paints pack, Asian Paints. So let's go across to the MD, Amit Syngle, joining in on the detailed outlook on the numbers that went by and the year that looks ahead. Amit, always a pleasure speaking with you. First up on the demand front, of course, the fourth quarter saw an outsized benefit because of demand shifting from the third quarter into the fourth quarter. We saw a favorable base as well, and inflation was, stabilizing, so to say. As we look into FY24, what are your thoughts on how one should read into demand?
So overall, given the demand conditions, what we have seen in quarter four, we have seen good conditions as far as retail, industrial, projects and institutional segment. Overall, I think the demand situation should be good. We have definitely, a longer Diwali coming in this year to that extent. And we also see that the GDP kind of predictions are very strong from a 6 to 7% kind of a zone. And paint industry always has operated one and a half times that kind of a growth to that extent. And therefore, I see that overall predictions from the point of view of retail, institutional, industrial, and our home decor segment seems to be pretty buoyant in terms of how we see.
All right, so what does that mean in terms of numbers? Because I was listening into the conference call, you said that you're looking at double-digit volume growth. Paint industry, if you look at it, one and a half times GDP would come to around 10 to 12%. But you being the leader, of course, are likely to grow faster than the industry, right? So, can we put a bit of a number here to the volume and the revenue range that you're expecting?
So overall for the year, I would say that definitely on the double-digit front, it should augur anywhere between the 10 to 15% mark in terms of how we see to that extent in terms of going forward. And as I said, a lot depends in terms of how the rural demand also figures out, given the fact that on the monsoons, there is a little bit of a question mark, which is kind of coming out to that extent. But as I said, given the larger festival season, the larger consumption in terms of the real estate housing, which we are kind of seeing, and a strong automotive and industrial growth, I think these numbers should be definitely possible.
Lovely. Are you comfortable with gross margins of 42%? We've seen an expansion in the fourth quarter, or do you go back to your earlier range of 43 to 45%? I ask this because despite a near 21% margins in the fourth quarter, you've guided for that 18 to 20% band itself. Just wanted to understand that.
So two, three things. If you look at the gross margins, they have expanded from the 38, 39 in terms of what we were operating to that extent. And it is a result of, lot of actions, including the deflation in the raw material prices in terms of what we have seen, plus the work which we have done around formulation efficiencies, sourcing efficiencies, and so on and so forth. So what we feel that going ahead, if you look at from a point of view of material prices, there is still a little bit of volatility which is kind of going in. And we don't have to look at only the crude prices, because if we look at other areas like titanium dioxide, monomers, solvents, and so on and so forth, we are finding a different trajectory in each of the raw materials to that extent. And therefore, we feel that possibly going forward, you could kind of still see another 2-3% kind of an inflation scenario in the first half of the year, and possibly some streamlining in the second half of the next year to that extent. Given this, possibly, we think that we need to be cautious in terms of how we are seeing our overall margins, because it might not be possible to kind of take more price increases, given the fact that we've already taken fairly good number of price increases in the last about year and a half to that extent. And therefore, given this kind of a scenario, we are still kind of playing it overall safe in terms of how we want to put our margins and peg our margins going forward to that extent. And that is the very reason in terms of how we are seeing it, it is in this band.
Let's talk beyond FY24. You've said that the paint industry, which is close to around 75,000 odd crores, could go all the way up to 100,000 crores in a couple of years, 3-4 years from now. But at the same time, you are also looking at increased contribution coming in from your home decor, industrial and international business. So if we look at, say, FY25, FY26, what does the revenue mix of Asian Paints look like? Currently, it's majority domestic decorative. Going forward, how do the contributions of other verticals change?
So overall, as I said, this 1 lakh crore figure was more over a 5-year period in terms of what it was auguring. As we see it by FY26, which is possibly another 2 to 3 years in terms of what we are looking. One, we are definitely saying that the home decor market should kind of be about 8 to 10% of the overall architectural business to that extent. We also see that the industrial business today would definitely kind of go up in terms of the overall mix by about 2 to 3 percentage points to that extent, and ditto with global to that extent in terms of way it is kind of growing overall and what we kind of see in terms of the overall kind of trajectory going forward to that extent. So I would really peg it saying that the overall deco business possibly would retain in the zone of about 80-82%, and rest of the businesses would kind of form into that bracket of about 18 to 20% as we kind of see that.
All right, so does that mean we are looking at Asian Paints having a revenue of almost anywhere between 55 to 60,000 crores by FY26? I am purely looking at your current market share, assuming that it stays stable irrespective of the competition, and plus another 20% coming in from the other verticals that you just spoke about. So are we making that road to 55,000 by say FY26?
So if we look at just as a perspective, last 3 years, as an organization, we have grown from 19,000 crores to 34,000 crores in 3 years' time to that extent. And we feel that possibly, if we are on a good trajectory, we should kind of follow the same kind of regime going forward in the next 2, 3 years to that extent. And I think we think that possibly if we are able to maintain that kind of a trajectory, it could kind of augur for us to kind of really be in that territory in terms of what you just mentioned.
I read your commentary, and the word that really stood out this time around for me was aggressive. You said that as being a market leader, you will aggressively pursue growth. Now, I've been reading a lot of your press releases for the last many quarters. I've never seen you use this word. Can you explain what aggressively pursuing growth means for you?
So overall, when you look at even the past trajectory, if you look at the CAGR numbers in terms of the volume growth, they have been largely in double digit in terms of what you have been able to see over the quarters. When I say aggressively, we mean that our focus with respect to really working around with respect to our decorative and our industrial business would remain that we pursue each business with a very, very strong focus, which we put. So whether it is in terms of the rural markets or it is from the point of view of the urban markets, our aggression would remain with respect to our distribution, our marketing strategies, our aggression with respect to overall our communication and advertisement, which we are going to kind of go to do. And as we see, I think the aggression will come more also from a point of view of innovation and new areas of strength which we are adding in the organization as we kind of go ahead. So I think the word aggression possibly encapsulates the overall areas that we would be kind of doing a 360 degrees in every possible way, so that we are able to give a very, very strong trajectory to the business as we look at the next 3 to 5 years.
We always talk about competition and plans that competitors have. You often said that capex does not entirely mean revenue share, market share. How has the competition or competitive scenario or the impending announcements, how have they changed Asian Paints?
See, actually, we are very clear that we have a very strong strategy of our own. And I think we don't really kind of believe that it is just the strategy is just price led or a strategy just distribution led. I think the strategy is overall led by overall direction in terms of innovation and what you want to kind of do in the market in terms of really growing the overall consumption to that extent. And that has been a single most area as a leader which we have been focusing. So whether it is changing the painting frequencies or looking at entering into newer categories like waterproofing, adhesives, and so on and so forth, I think we have been very strong in terms of looking at our focused areas in terms of where we want to grow and what we want to kind of do. And at the same time, adding value to the industry, to the consumer in a very strong manner. Going forward, what we feel is that given the pace the industry is growing and where it will reach, any new player which comes in, even if it does, in the next 3, 4 years, another 2,000 to 4,000 crores, it would just mean about 3 to 4% of the total market, which really is not anything about movers and shakers and really disrupting the overall market in a very, very strong manner. And therefore, I think we are very clear that our strategy of really looking at pursuing growth, looking at possibly adding value in new categories and diversifying into home decor is a strong strategy in terms of which really upholds us for future, and therefore we don't have anything to worry about competition.
I mean, I heard you mention the word adhesives, and you have been in that space for the last couple of years, etc. But a couple of days ago, we spoke with Bharat Puri. Pidilite, has entered the decorative wall paints as well. And I know Bharat Puri is your mentor. He's been there, when you were in Asian Paints as well. Do you have a word for him? Any advice?
No, I would say that, I think it is always welcome that we have new and more players kind of coming in. However, what I see is that it looks like a more range completion exercise to me so that they are able to service their set of retailers in terms of the full demand to that extent. I don't think so. It is a move which is more like a disruptor move to kind of really take a stance with respect to the paints in the market to that extent. And therefore, I don't think so that it is something which is going to kind of really shake the market in any way.
So basically, they're doing to paints what you are doing to adhesives. Should we look at it that way?
Not exactly, because we are kind of really in the adhesives frame, looking at the premium and the luxury segment very, very strongly and looking at more innovation in terms of products. The strategy there seems to be more price led and more, at the economy level to that extent. So therefore, I think the trajectories are very different in terms of the way we are looking there.
All right, let me ask you a final question then, and this time I'd like you to wear the hat of a financial analyst who's perhaps looking to invest in the paint sector right now. Usually when there are a lot of people who look at one sector, the growth opportunities, etc., a couple of things happen. One, established players continue to hold on to their might with the kind of strength that they've built over the years. The second thing that happens is that new players try to gain their might, but they don't gain that sort of profitability. The third thing that happens is there is some sort of consolidation. And the fourth thing that happens is that the multiples at which these companies trade on the exchanges look to derate because of the muddiness of the competition itself. How should one look at this sector purely from an investment standpoint?
So overall, I think the sector, as I said, has very got good growth potential, as I see. And unlike possibly any other sector, which could be from a point of view of consumer durables and other things, I think there is a clear trajectory which we have seen in the past as well in terms of how this sector has grown. And I think the last 3 years are evidence to the fact that, even with the COVID with us, we have been able to kind of really do extremely well in the industry. As I said, we have been able to grow from 19,000 to about 34,000 crore plus at this point of time as well to that extent. Going forward, what I see very clearly is that this is an industry to bet for, definitely. And this is an industry which is kind of really contributing to the overall kind of economy in a very, very strong manner. And therefore, I think this is a clear industry where people should kind of look at investing, because if so many new players are coming, definitely all the new players are seeing something in this industry which is really working out to that extent. And if players can earn good profitability, I'm sure as a good financial investor, people should see this industry as to giving them good returns.
When Jeff Bezos says that your margin is my opportunity, do you see a case for margins to structurally reduce for the industry? Because especially you're the margin leader as well.
So I don't think so as we go ahead, because as we are taking measures with respect to some of the backward integration measures we have announced in terms of the work we are doing. Also, I think there is a lot of structural work with respect to operational efficiencies and other areas which we are putting up into the game.